Yeah, I'm on a roll today. I'm doing lots of updates, but you know what? It's important. We just had a major dump, and a lot of people are in the wind right now, and they don't really know what's going on. That's why, obviously, I'm helping my main community, my trading group, but even people publicly who follow me on YouTube, I want to help you guys too. So, let me let you know what I'm thinking. If you've been tracking my analyses, you'll know my models have been like absurdly accurate to an unfair degree. Um, So you could sort of trust my analysis to an extent, but again, there are some variables at play here, and there are some bearish signals. So I have been very bullish that we bottomed out and we're recovering. That doesn't mean we're not going to have another dip. I don't think we're going to hit another major low, right? So the main low, all the way down here at 30K, I don't think we're getting back down to 30K or below, but we could have a dump from here, and let me show you why. So if you're looking at the lower time frames and you zoom in, you'll see everything I predicted, right? So if you really have to watch my last few videos. When I put out a video, you should always watch the couple before that if you haven't yet, because it'll be a lot more insightful because you'll understand what my thinking is and how it changed and what I was looking for then versus what actually happened. So right now, if you did see my last few videos, you know like exactly what I predicted happened, right? We would go down, hold at this trend line support, and then we would bounce because the 15-minute Stoke bottomed out. So I predicted this bounce. This is an example where if you know how to use my model, you could have entered right on this trend line support with a 50x leverage trade and made a killing just on that small bounce. And that's one of the things I do when I'm scalping. However, using high leverage like that, it's extraordinarily risky. So the only time you should do it is if you really know what you're doing and you have very, very strict risk management protocols. So, for instance, if I only had a small sum of money available in that trade and in that account that was accessible to the leverage side, I wouldn't get liquidated and lose a lot of money if it were to dump because sometimes my model's wrong. It obviously happens every once in a while. But that's just an example. So I was able to predict this bounce. And then, as I said before, the 222 EMA on the 15-minute, which is also the 55 EMA on the hourly chart, along with the bottom of the Ichimoku cloud, is a strong zone for my Ichima model. It's strong Ichima dynamic resistance. There's two of my Ichima dynamic resistance levels at that same price. Resistances at that same level. So it's going to be really tough to break through. So at this point, if we break through, I think we break out big. If we don't break through, I think we might actually dump a little bit. And let me show you why. There's two competing models here. We have this strong trend line, which I've repeatedly predicted would hold, and it did. Multiple candles here and here. But take a look at this. One of my favorite formations are my favorite bullish and bearish formations are rising wedges and falling wedges. Rising wedges like this, when you're getting progressively lower highs and progressively higher lows, and it's consolidating into an apex at the top of this wedge. As you get closer to that top, you could potentially have a really big dump. Those are usually very strong bearish indicators, and the inverse is true. If you are going down, and you have a falling wedge, the same formation but going down, that's usually a really strong potential breakout. Here, this is certainly a potentially bearish scenario, and the reason why is because if you look at the 4-hour model, we sort of are running out of steam. Initially, we started really strong on this bounce. I mean, I guess I wouldn't say it's a bad bounce because we went all the way from the bottom back up to here. Just strong recovery because we went from 33.5 to 38.5, almost 39. So that's a really strong run, but the prior 4-hour reset was a pretty hard dump. Now, the rest of my model has been holding pretty well because I've had a really great support structure here, but it is possible that it's going to fail given that the 4-hour Stoke is getting kind of high, right? So right now there's 2 hours and 40 minutes left on this 4-hour candle. If this 4-hour candle pushes up to the top of this rising wedge and closes there, we might have one more 4-hour candle to potentially push through, get up above 40K. And I said if we break above this resistance formation, we're going to go up into the 40,000s. I still think that's going to happen, but we need that to happen within the next two candles. We have 2.5 hours left on this one, plus 4 hours on the next candle. It's possible if we don't get any upward mobility and pushing above these Ichima dynamic resistance levels here, that 55 EMA and the bottom of the Ichimoku cloud, the red section, if we don't push above that by the end of this 4-hour candle in 2 hours and 44 minutes, we might end up getting a red candle on that next 4-hour, and that would constitute a bearish reversal on the 4-hour model. If that were to happen, we would almost certainly fall through this trendline resistance and come back down into the mid 30,000 range. So that is a possibility, and that's one of the reasons why I haven't gotten in 100%. I'm in about 50% now. I got in at the bottom before this move up. I got in a little bit earlier when we were on this dump down, and I've pretty much got 50% of my overall positions back in the market for the stuff that I had taken out or gotten stopped out of on the big dump. I still have plenty of capital left. Half of my available trading capital is in, which means half of my availing trading capital is still on the sidelines. If you were trading with, say, $50,000 and you had 25 grand invested, you could make a lot of profit on that, but obviously having 50K would be better. I'm very bullish, but I don't want to put that in just yet because I still want to keep that 50% of my assets for trading on the side just in case. We may dump, in which case I can buy much lower because I'm still overall bullish, right? I don't think we're going to new lows. We're not going below 30K in my view. So if we were to get a dump, I could buy lower and that would lower my average entry on some of my positions. So that would be great. Or I can wait until we break above these Ichimoku dynamic resistance levels. Because once that happens, if we push through the top of this cloud, we are going to run back up 50, 60, 70 grand over the next week or two. I'm pretty damn confident about that. So I want to wait and see how that plays out. If we start moving up aggressively, I can always buy in later. I might pay a little bit more, but I can have more confidence that we're going to continue upward. And that's an important aspect of my strategy and my risk management. You want to buy when you can have confidence that you're going to continue upward, and you don't want to buy when you're at the top of a potential bearish configuration like we have here with the rising wedge. So we have a few things to watch for. Obviously, watch closely, see what happens on the hourly chart with the 55 EMA and the bottom of the Ichimoku cloud. Watch what happens on the 4-hour model with the stochastic model getting pretty high into these higher levels. It's now up to 85 or so. If we get back up into overbought territory like we were back here, we could potentially see a dump like we did on this big dump. Again, not to all-time lows or not to yearly lows, but certainly, I think we could potentially have a dip if it plays out like that. If it were to play out like that, keep in mind, there's a couple ways you could draw this. Typically with a corrective formation, when you have, as far as like an Elliott wave count, you can have an ABC correction where you would see, it could be this. This would make sense for a correction, right? That could be your ABC, and now we're in a new motive wave, that new impulse up. But it depends. You could also potentially argue that this is an entire A, this is an entire B, and then you still have a C wave that gets back down relatively close to the prior bottom of 30K. So since that's still a possibility, I'm going to wait it out. One of the reasons why I think it's probably more likely that we go up is because that daily model is still really bullish. So I'm probably about 70 or 80% sure we go up and don't get the dump, but there's still a 40, there's probably a, I would say I'm about 70 or 80% sure we go up, which means there's a 20 or 30% chance we go down. And I don't want to play those odds right now. So that's what I'm looking for now. Stay tuned. I will do another update later. I'm going to take my kids to the zoo because it's Saturday. If you are in my trading group, my private group, paid members, obviously, let me know if you need me. Shoot me a DM if you want to get on the phone. Obviously, I'm available even when I'm out and about. So if you really need something, let me know, or shoot me a DM if you have any questions. Anybody in public, if you aren't in a position to join my private group, that's totally cool. I would encourage you to drop comments on my YouTube videos because I usually check them, and if you have a question, you could do that, or you could join my group for free. So I have my trading community where people pay for access to all of my analysis, all of my predictions, and all of my trades. I teach them and all that stuff. In order to see all that content, it's a paid service, but if you join the Discord group, there's a free room. When you first join, there's a bunch of information about the group, and there's a public chat. So you can drop questions in that public chat if you have any questions about my models or how stuff works. Obviously,